All right, welcome back to another episode of the Black Bullion Show. Lower for longer. That's where the Fed says it will keep interest rates as long as the ronies are here. Now, we have some new developments that could impact how gold and silver react to our viral villains. And for those of you who are new here, I call our viral villains the ronies because YouTube throttles your video if you speak their actual name like they're Voldemort or something, or Candyman, if you guys have seen those movies at all. So we have some new updates to get to, so let's get into it. But first, if you're new to this channel, please hit that big red subscribe button right down below. Also, please hit the like button. Helps to get this economic evangelism right on out there to the masses to bring more people into precious metals. Okay, so Peter Schiff has touched on the FOMC meeting from this week in his new article entitled "The Fed Money Printing to Infinity and Beyond." So I'll read a quick quote from this article here. The central bank left interest rates at zero and gave no hint that it will ever raise them. It also said it will continue to purchase at least $120 billion in treasuries and mortgage-backed securities each month. In a separate note, the FOMC extended its dollar liquidity swap lines and repo operations for foreign and international monetary authorities through March 31st, 2021. Wow. As Peter Schiff put it in a tweet, today Powell eased policy even further to reassure markets. During his last press conference, he said the Fed was not even thinking about raising interest rates. Today, he said the Fed was not even thinking about raising interest rates. Officially, the FOMC said the committee expects to maintain this target range until it is confident that the economy has weathered recent events and is on track to achieve its maximum employment and price stability goals. In other words, there is no end in sight. So it seems like it will be foot on the gas moving forward, essentially. And as we saw some consolidation recently in gold and silver a bit this week, this will support further upward movement in metals. But let's see what the Fed said about this in their own words. So this is the exact FOMC statement, and I'll just read the following here. The ronies is causing tremendous human and economic hardship across the United States and around the world. Following sharp declines, economic activity and employment have picked up somewhat in recent months, but remain well below their levels at the beginning of the year. Weaker demand and significantly lower oil prices are holding down consumer price inflation. Overall financial conditions have improved in recent months, in part reflecting policy measures to support the economy and the flow of credit to U.S. households and businesses. The path of the economy will depend significantly on the course of the ronies. The ongoing public health crisis will weigh heavily on economic activity, employment, and inflation in the near term, and poses considerable risks to the economic outlook over the medium term. In light of these developments, the committee decided to maintain the target range for the federal funds rate at 0 to 0.25%. The committee expects to maintain this target range until it is confident that the economy has weathered recent events and is on track to achieve its maximum employment and price stability goals. So, as Peter Schiff said, the Fed sees inflation as not being too worrisome because of weaker demand and lower oil prices. However, the items that people are buying right now, such as household food, have seen strong demand, and inflation definitely hit that sector. Now, how long will we be dealing with the ronies? Well, it seems like the Fed will keep us lower for longer on that path for as long as the ronies are around. And it looks like they said in the near term and in the medium term, we could be dealing with this. Now, you guys may have heard about this, may have seen this, but the WHO recently came out saying that we may actually not see another wave, as we may already, or as we may actually have one big one that we're dealing with right now. Now, take a look at this graph down here. So these are the cases impacting certain European countries. You got Spain, Germany, France, and Belgium. Now, we heard that Europe had gotten this thing under control. Yeah, we're starting to see a spike again in certain countries, especially France and Spain, who were also some of the hardest hit countries at the start of this. Just take a look. Spain is spiking severely up here. France is above the pack. That's a little bit more closer together in numbers. But when this thing first started, Spain was definitely up there, and then France hit a spike too. So it looks like things are starting to turn a bit. And also check out this graph below. So it says more than 15 million cases have been reported globally since January. And basically, we've been seeing cases rise from the start of this thing globally, which is pretty wild. So if we haven't hit a global plateau yet, that has an impact on gold and silver as more countries, including the US, are ramping up their monetary and fiscal responses. As the Eurozone came up with their own stimulus recently, it seems like it's just in time with these spikes that are popping up again in Europe. So all that to say, gold and silver will have a longer period of time where their ascent in price will be further supported. But let me know what you guys think in the comment section below. How long do you think the Fed will keep rates at zero when you have things such as the ronies continuing to spike and not even hitting a plateau yet? Let me know what you guys think in the comment section below. Thanks again for watching. Please hit the like button. Please subscribe if you're new. It's Black Bullion.